Good morning and welcome to the VSA Morning Miner. It's Thursday, the 14th of July. It's still hot in London. Paul, how are you doing this morning?
Still feeling pretty good. I didn't sleep too bad last night compared to the night before.
Glad to hear it. Right. We've got a few announcements out from Shanghai Mining Club members. Let's start off with Cerrado Gold on the TSX.
Yes, that's right. The Cerrado Gold, Brazil gold producer, has filed their EIS paperwork to the Tocantins state for approval to develop the Monte do Carmo gold project. The EIS filing is part of a three-stage process, which essentially gets them the permit to develop, the permit to construct, and the permit to operate in succession. So this is the first part of that three-part process.
Yeah, very exciting gold growth story there. In production already, but rapidly expanding. Galane Lithium.
Galane Lithium, the TSX-listed lithium brine developer in Argentina, successful initial commercial flow rate pump test from a lithium brine well on the Patapila property, Hombre Muerto Solar, 10 to 12 liters per second on a flow rate. This testing program is to test several wells, another one of which on the Patapila property, and 2 wells to test on the Rana de Sal property. All part of the advancement to prepare these for development finance.
Yeah, it feels like some of the lithium companies are coming out of shelter from the fall in their stock prices recently. We've seen a pickup in news releases and activity coming out where I think they perhaps felt that over the last couple of months, while share prices have just been dropping, there's no real benefit in releasing news, but that's starting to change. So perhaps management teams feel that the equities have started to bottom out.
Yes, and as a general view for the mining sector, I think there is more and more interest among investors now to do some bottom fishing on equity prices at this point, where the valuations are just getting rather compelling in many cases.
Yeah, and similar vein, Premier African Minerals released some drill results this morning.
Yes, this was on their AIM-quoted Zulu pegmatite property in western Zimbabwe. Infill drilling here in order to bring inferred resources on the Zulu pegmatite to indicated. No particular surprises. 5 to 20 meters is average thickness on the pegmatite and 1 to 2% lithium grades. What is encouraging also is the rather good consistency we're seeing in some tantalum and rubidium values coming through as well, which would suggest that the final flow sheet for the plant may ultimately try to recover those to concentrate. So they're making good progress, I'd say.
Yeah, these new lithium projects are looking like they might become an increasingly important source of some of these critical minerals that are very small markets, but crucial to things like defense and other sort of.
Yes, and tantalum in particular, because that's a semiconductor precursor material.
Yeah, and are so dominated by China at the moment in terms of their supply chains. Right, I think that's all in the Shanghai Mining Club. Atalaya and Mining have come out with Q2 figures. Any thoughts there, Paul?
Q2 production results out from AIM-quoted Spain copper producer Atalaya Mining. I think one of the key points for me was the fact that the copper recoveries there they reported them as strong at about 86% or so. It is strong in comparison to the prior periods, but not particularly strong, I would say. in comparison to other peers in other localities, 86%. Copper production was 13,000 tons of metal, which was an increase, though, of 16.8% over Q1. So that is a very good sign there. So as long as they can keep the power stable in order to keep the mill running, they seem to be able to feed it well enough with the higher production rates from the mine. So this is looking encouraging.
Yeah, and obviously maximizing Q2 output while the copper price was still high or higher.
Right, because we're looking at a price of $3.30 right now being quoted, as opposed to what they would have received, which is a good at least 50 to 70 cents higher than that would have been during the Q2. So
yeah, and I wonder if they're benefiting because Spain put in a cap on electricity prices. So I don't know if, as an industrial user, they benefit from that, but that might help some of the cost pressures.
Mm-hmm.
Right, let's finish off with Kenmare Resources also coming out with Q2 figures.
Right, Kenmare, the AIM quoted mineral sands producer on the coast of East Africa there. Lower Q on year results pretty much across the board, showing there lower volumes, lower concentrate tons, and so forth. The only thing is that the prices remain pretty good here through Q2, both with zircon and ilmenite. So they have been working in order to make sure that they don't have interruptions in power supplies as well. So they have gotten the project fully operational now in that regard at mine site as of May. At the end of the half, they had net debt reduced also down to 65 million, which is very encouraging because it means they have capital available going forward for project improvements, M&A, or increased dividends according to board priorities. So we'll see how they do, but the marketplace itself is holding up pretty well for them.
Yeah, it's interesting that mineral sands prices haven't fallen so much like the exchange traded metals. I wonder whether that's a result of them being traded on exchanges and the ability to trade with higher frequency that's enabled funds to use industrial metals as a sort of macro short trade, whereas
yes, I would say
metals,
that has something to do with it, but it also it depends upon the timing of the actual contractual obligations on the sales of the mineral sands concentrates. So we'll see whether or not in the next bidding cycle or orders cycle for China, because China is the elephant in the room as far as mineral sands offtake is concerned, whether or not they ask for lower prices in the next couple quarters.
Because in both areas, inventories being at unbelievably low levels is a key feature of both markets. So they're still tight, whether you're talking about mineral sands or industrial metals.
Yes, that's right.
I think the one difference though is today's results from Kenmare probably showing how difficult it is to increase existing capacity beyond sort of current levels without new mines coming on, showing sort of incumbent capacity really is doing all it can to increase supply.
And that's right, and at the operating level too, they're kind of at the mercy of what's available as far as shipping capacity is concerned from their locations, as well as they don't have a whole lot of latitude in order to modify the grade on mineral sands projects either, according to the mining sequence.
Okay, Paul, thanks for your thoughts. We'll be back tomorrow morning. Speak to you then. Cheers.
Very good. See you then.